Okay, great. Since we have quorum, we're going to go ahead and get started. So this April 28th, 2025 regular meeting of the Fairfax County School Board Audit Committee will now come to order. So first order of business is to approve minutes of the March 17, 2025 meeting of the Audit Committee.
I move for adoption, Mr. Chairman.
Is there a second? Okay. Oh, yeah, it's a public meeting, so we need to keep
It has to be open.
Yeah.
Has to be open.
Yeah, thank you. Okay, so seeing a second from, or a motion from Mr. Moon and a second from Ms. St. John Cunning, all those in favor, raise your hand. Okay, unanimous for those board members at the table. Thank you. Okay, now we will move on to 1.03, which is the FY25 business process audits. Over to Ms. Moore. Thank you.
Good afternoon, everyone. I will be presenting the results of our FY25 business process audits. Just as an overview, these business process audits are performed either due to a change in management, which could be a change in principal or finance tech or program manager. And we also look at this based on results of our continuous monitoring audit procedures. And we also get requests from our regional assistant superintendents and also principals to perform some of these audits. And just to let you know, our business process audits, these are our ad hoc audits, and these are more detailed audits on specific schools or sites that we conduct. And so this is a all-day visit that we go to the schools or the sites, and we conduct a review of the non-appropriated and appropriated transactions at those particular sites. And the objective of the business process audit is to evaluate the effectiveness of processes and compliance with the applicable regulations and policies, as well as determine if internal controls are adequate and functioning as intended, and determine if transactions are reasonable and do not appear fraudulent. So this particular reporting period, we completed 5 business process audits. That included 4 school audits and 1 office audit. From the 5 visits, there were a total of 13 low-risk findings and 4 moderate-risk findings, for a total of 17. So just to break it down, we had 4 low-risk findings for Daniels Run Elementary, 1 low-risk finding at West Springfield Elementary, 1 moderate and 3 low-risk findings for Great Falls Elementary, and 1 moderate low-risk findings for Mount Vernon High School. We also had 2 moderate and 1 low-risk findings for the office for the warehouse operations, which was our department and office that we also selected to conduct. So I wanted to kind of go into what those moderate risk findings that we had. So for Great Falls Elementary, we had 1 moderate finding, which was due to the FMR, the financial management report, which we call the FMR reports. The online FMR reconciliations for September, October, and November were not reconciled until January 15, 2025, and approved January 21st, 2025 for each of those months. The completion date set by financial services was actually set for September, October, and November were actually October 31st, November 26th, and December 31st. So they were not completed timely. Additionally, for the non-appropriated procurement card statement for December 2024, it was not reconciled and approved on a timely basis. For Mount Vernon High School, there was 1 moderate risk finding, also due to the FMR reconciliation not being reconciled and approved in a timely manner in the online application for August, October, and November of 2024. We also had that the November hard copy of the FMR was not reconciled and approved until January 9th for the FMR position report and the FMR expenditure report at the school. It wasn't approved until January 13th, and the due date set by financial services was December 31st of 2025. There was also some non-appropriated procurement card statements for one of the 3 months that we sampled that were not signed by the finance technician as it should have been. So for the warehouse, We had one moderate risk finding, which was due to some sample procurement card transactions that were made outside of the proper purchasing process, totaling $16,000. And these purchases in particular were related to the freight management, which is a centralized process that allows FCPS to manage all the freight costs that are occurring at all the schools via UPS and via FedEx. And so this was a new process that was just put under the warehouse operations when they moved under the chief operating office. And so these particular freight costs are occurring at the schools, and they are related to those purchases directly with the vendor. But there is a central account where the schools can purchase the shipping costs on a central basis and have those items shipped directly to the schools. And what was happening, there was no one to reconcile that these shipments were being that were received by the schools, by the warehouse, since this was something that was happening more so at the school level. Also, we noted that these purchasing cards were kept on file for one of the vendors. I believe it was UPS. The vendor card was kept on file, so the payment was made prior to any reconciliation being done by the warehouse office. The second moderate finding related to the warehouse office was the 2024 FMR for November 2024 was not approved in the online application or on the physical copy within a timely manner. And so OAG made a recommendation that is to use there's an online cover sheet to use to make sure that is done in a timely manner and completed. So as we relate to these moderate findings, we have asked management to provide a response, and we will follow up with them on a quarterly basis, which I believe will start in our next follow-up, which will be around our June meeting. So I will hand it back to Ryan to see if there are any questions as it relates to these business process audits.
Great. I think Mr. Moon, over to you.
Okay, actually, warehouse operations, I think you're going to have to go a little slower because I was getting a little confused. So correct me if I understood you wrong. So schools would place orders, and shipments would come to schools, but warehouses make a payments on shipments without checking shipments have arrived. Is that?
So correct, my understanding is the school places the order. The shipment is put into a centrally based account, which the P card for that account is managed by the warehouse operations. So not at all does the warehouse operation receive the shipment, the schools receive those shipments. And then the warehouse has to reconcile the P card that pays the payment on account for those particular shipments that each individual school makes.
So warehouse needs to make sure the shipments arrived before they make the payments. And what you're saying is they did not confirm the receipt of a shipments before making payments?
So I believe the schools are confirming receipts, but there's a disconnect because the warehouse owns the P card and not the schools. So while the schools are confirming receipt at the school, there's no communication between the warehouse and the school that these shipments are being made or not. And before the P card is being reconciled, the warehouse, there's so many schools making purchases, the warehouse, it'd be impossible for them to reach out to each school to see that shipment was made.
So whose responsibility is that? Is the school supposed to inform warehouses that they receive the shipments so that warehouses can make the payments, or warehouses have to reach out to schools to verify that they receive the shipments?
Great question. Accountability for that, right? So from our understanding, Mr. Moon, that the credit card, the procurement card, is with warehouse operations. And I saw that we have our comptroller and also, the chief for operating officer here as well. So our understanding is that the department who maintain the card should be responsible. You make sure everything is correct before you paid, right?
So that's the warehouses in this case.
Right, right.
Okay.
That will be my understanding, but I don't know if management has any additional thoughts to add. Or maybe Dr. Reed or Marty.
Sure. I know we discussed this, and I know Mr. Smith did as well. So, Mr. Smith, do you want to respond to that?
So yes, and so what Ms. Coe is saying is correct, so that the warehouse should be reconciling because they own the P card, and I do know that procurement is working with the COO and rectifying this. But again, with the individual schools making the deliveries using the same P card account, those individual schools were confirming receipt, but they weren't closing the loop with the warehouse on that.
So again, so accountability, where does that go to? Does that go to both schools and warehouses, or it goes, who has to verify the receipt of a shipment?
So with our P cards, the owner of the P card should be the one verifying
So
the
in this case,
receipt
it
of
was a
the
warehouse
shipments.
because they had P cards.
Yes, the warehouse belonged to the P card, so the warehouse should have been verifying, and yet with the number of shipments and without the ability to verify who was using the link for the P card, there was an inability to track that with those individual schools.
You know, this particular example cited piqued my interest because we were, you know, deciding school board was taking an action upon purchase of major textbooks, resources, and we'll be having a lot of shipments. I don't know where they go, whether they come to our warehouses or they go to our individual schools directly, and then who's going to make, I mean, it's a $15 to $17 million worth of textbooks. So that's what I got on this one.
Okay, any other questions on this? St. John Cunning?
Okay, so I think I'm with Mr. Moon in terms of confusion. The warehouse, the school purchases, looks like books, and that the purchase of the cost of the books comes out of the school account, but the freight cost comes out of, so for one invoice, there's two payments. One is for the books, I could see that coming out of school account, but then the freight.
Yes, and
If
so.
you would just, I just, understanding is confusing, so I can understand, like, if all these schools are ordering, and as far as they're concerned, they received the books, they paid for the books, but freight is separate.
Correct. Freight is separate. So when we audited the warehouse operations, all we could see was the freight cost. We couldn't even see the amount of the books that was purchased because that was, like you said, at the school level. All we could see was the central manager account, those transactions for the particular freight costs related to the shipment of the books.
I mean, so I'm going to ask a very basic question, and I don't know if anyone can answer. Like, is that best practice, or is that common practice?
Which practice? Are we talking about the one group ordering the books and the other group owning the? I think I think we could improve that practice with some checks and balances, and staff are working on that right now. It's like having two people in a checking account that never gets reconciled, right? That doesn't usually end well. So we want to make sure that that all parties are aware of the receipt and the expenditures and the receipt on both sides. And I think there's some simple fixes that staff are going to be working on to address that.
And then, can you explain to me why those costs are bifurcated? Like, why the warehouse would pay shipping and then the school would pay for the books? Like,
the fact that the shipping is handled at the warehouse level, but the overall billing is handled at the, purchaser at that overall level. So the headquarters will be handling the overall orders, but then the shipping probably is handling at the warehouse level because they are the ones who are going to be finally delivering it, and they will probably decide that. That's one industry practice that can be there, but I cannot answer specifically on this question.
My understanding is the problem is that the order is delivered to the school because they paid for it, but then the freight, so it was not delivered to the warehouse. It wasn't like the warehouse delivered it.
Okay, I think Seema has a point.
Yes, so I wanted to add, that's a wonderful question. And so the centralization of the shipping, the UPS and the FedEx charges is basically we're getting better costs in centralizing it rather than the decentralized model. And that's why it was done that way. But we are actually going to do a review to see what's the best way to reconcile this, because it's either you decentralize it and make the schools responsible for the entire charge, which is the shipping and the books that come to them, or you have to get some type of better communication going where the schools, once they receive the product, notify central warehouse so that they can perform the reconciliation centrally. So one or the other has to occur, and we're going to be looking at what's probably the best way to do this.
Okay, and I would understand a school, like if they don't have to, because their budgets are limited, so if that freight cost doesn't come out of their budget, I could
doesn't.
see the advantage,
Yes.
but then I can see where it's causing a problem. Okay.
Yeah, and right now it is centrally budgeted, so with warehouse, so that's why they get the freight and the shipping. So the schools don't have that charge. Okay.
Okay, any further questions on this? Okay, great. Thank you, Ms. Moore. So next we'll be moving on to 1.04, FY25 quarter 1 and 2, continuous monitoring. Back to you.
Thank you, Ryan. Okay, so now I will be providing you with the results of our FY25 continuous monitoring procedures. This is for quarter 1 and quarter 2. So as it relates to our continuous monitoring procedures, these are our more technology-based audits. We analyze patterns and trends and select transactions and select and test transactions. The methods will enable the office to further understand risks and identify exceptions in a timely manner. We also use continuous monitoring as our sample for our local school activities funds audit. So these results will be included in our FY25 local school activities funds audit that will be reported later this year, which I believe is October 2025. And so what we do is each quarter, we select a sample of transactions. And so for quarter 1, what we actually did this year is that we did an analysis of quarter 1 transactions just to see where those high risk areas are for our transactions. And so we can determine for quarter 2 what sites to select that we want to visit. So in quarter 2, we visited a sample of sample of selected sites where we visited, where we asked for supporting documentation for non-appropriated and appropriated funds transactions, and we also looked at our procurement card reconciliations, if I'm not mistaken. Then we also selected a sample of transactions where we asked the schools just to provide us the supporting documentation for those transactions, which we call more so a desk audit. And so any exceptions noted, as I mentioned, will be included for non-appropriated funds, will be included in the local school activities funds audit. We also look at continuous monitoring to determine if there are any business process audits that need to be conducted at that time. And so what we noted for quarter 1, we conducted that analysis and we conducted site visits at 18 schools. Subsequently, we selected 158 transactions for 60 sites in quarter 2. Out of 78 sites, 36 sites had no exceptions noted. 28 sites had exceptions noted in 3 or few areas, and 14 sites did not have any transactions appear in the sample of transactions. And just to note, a site may have more than one exception in an area or in more than one area, So just to get to the detail of what those observation areas are, we had 10 sites with non-bank reconciliation exceptions, So these exceptions are related to, and this is a normal area that we always have. These exceptions are usually around P-card statements not being signed and dated by the principal or the finance tech, or also what we call the administrative assistants, or the P-card statements not being reconciled timely. We also had 6 exceptions under the bank reconciliations area. These exceptions are where either the bank reconciliations were not signed and dated by the finance tech and principal, not completed timely, or the adjusted book balance does not match the ending cash balance on the summary trial balance. We had 4 purchasing process exceptions, which is also a common area, and these exceptions are usually due to procurement card transactions not receiving an pre-approval prior to purchase, or purchases exceeding the approval purchase order amount by more than 4%, which is in the regulation that is noted. We also noted that there a purchase of computer monitors that were purchased either from Best Buy instead of purchasing through Focus, which I think is prohibited. We had 4 timely deposit exceptions identified. This exception was identified when funds were given to the finance office and the funds were not deposited timely. During this continuous monitoring review, we did some gate activity procedures, and we noted that we did site visits at these particular areas that last fiscal year. The exceptions include gate receipts, sales not adequately or accurately being recorded in e-tics, or documented by physical tickets and required forms, and patrons being granted free entry without verification, and that gate sales receipts not being properly reconciled. We had 3 exceptions for incorrect account charge being noted. And this is when the exception noted is identified when P-card transactions were made using the incorrect fund account. And I think this was more so happening when the school was supposed to use the ECA accounts, which I believe is the educational contingency account, for things like for refreshments or staff development, and they were using the wrong accounts. We also had 3 exception notice for safeguarding assets, where we identified check stock not being secured in a locked drawer or a safe. P-cards were not on hand at the time of the audit, or they were not properly checked out when we were there for the audit. We also had 2 exceptions identified for competitive bidding. This is identified when purchases exceed $10,000 without competition, and they were used for non-FCPS contracted vendors. We also noted 2 exceptions were identified for sufficient documentation. This is an exception when our key backup documentation like purchase order, invoice, or receipt was not maintained on file or were missing, or that the school finance deposit slips were not accurately completed. And finally, we had identified 1 timely payment exception. This is when an invoice is not paid timely. However, we know that there was no late fee attached to that, but these invoices were not paid as noted on those invoices from particular vendors. So as it relates to these, as I mentioned, these our non-appropriated transactions will be included as a part of our local school activity funds. So there's no additional action that were required at this time, but we just wanted to provide you on an update on the 2 quarters that we have completed. And I will turn it back over to Ryan.
Great, thank you. Any questions or comments on this?
The competitive bidding, 2 instances. The bottom of page 2.
Excuse me, what is the question?
Yeah. I'm just directing your attention to, competitive bidding, 2 instances. So they are in violation of regulations, correct?
Correct.
I mean, are these all violations of the regulations?
Could be a violation of regulations or just internal control practices that are not being followed.
And so when you are selecting sites, how do you come to determine which site to audit?
Yeah, thank you for that question. And so typically, we look at when the timing from the last time we've conducted a continuous monitoring visit. And it's my understanding, and Nora and Kay, please correct me if I'm wrong, during our continuous monitoring for the entire year, we try to visit the site at least once during the 4 quarters. And so we will look at when the last time that site was visited, if there's been a business process audit completed, looking at the risk level of the transactions at this particular site. And that's kind of more so how we determine which site we're going to visit for each particular quarter. Am I missing anything, Kay or Nora, that you need to add? Okay.
So that's based upon your prior review of their processes that you determine which one to visit?
So for each quarter, so we take it quarter by quarter. So one quarter, we don't want to visit a site in more than one quarter unless we see an issue or a high-risk area. So for one quarter, we're going to visit, let's say, 10 sites. The quarter 2, we want to make sure that we visit another set of schools. We won't visit those same schools that we visit for quarter 1. So we kind of want to make sure we at least hit all of those schools within the 4 quarters, either through site visit or through requesting documentation from that school.
So when you say so it's 2 columns under number 3, number of sites audited, and then you have a sites visited. So you want to have all 200 schools basically come under number of sites audited.
Correct.
Then you divide that basically into 4 quarters and do that. And then amongst those audited, if you feel that the visits needed, then you decide to visit.
Do we decide to visit? Is
Decide to
correct.
visit.
Correct.
And if I may just supplement a quick point is during those visits, if we see some, like situations that would require a deeper dive audit, then we will do the business process audit, like the first item that we go through, and that is a deep dive in that particular school.
So when you select number of sites, once you select the number of sites visited, sites to audit, what do you normally ask them to provide you with?
And so what we'll do is we'll look at all the transactions across all the schools, all the transactions across all the schools. We'll look at the amount, like if it's over $10,000, because we know that, hey, over $10,000, that's supposed to be under a contract, right? So we'll look at those particular transactions over $10,000, or we'll look at the type of vendor that it is. Is it Best Buy? Is it Amazon? That would be more so considered some of our high-risk areas, because we know we have particular regulations and requirements as it relates to buying from certain types of vendors. So we will look at that as well to see, and then we will look at what are in prior year, what are some of the exceptions that we noted for that school in the prior year to see are these some of the similar things that we've noted before, and do we need to do another visit there?
So do you just audit, take a look at the transactions over a certain amount, or you look at everything?
Initially, we'll look at everything. Then we'll try to pull out certain parameters to kind of hone in on some of those sites individually.
So if you're looking at the entire quarter's worth of transactions, for high schools, it could be quite a lot.
It could, but we will break it down by cash receipts, cash disbursements, P card transactions. So we kind of break them down into individual buckets. And so we can kind of look at it a little bit more, at an eye level, and to see what we're working with, what type of transactions they are. And then also looking at the types of vendors there are and the amount also.
Yeah, if I may just compliment a little bit, is that we looked at the entire population, and you are correct, Mr. Moon, there's no way that we can look at or examine each transaction, right? Because then that would be the only thing we do throughout the whole year. So what we do is put them into different buckets, like Danielle said. We develop something called scripts. So like Like, for example, she mentioned about 10,000, or we have a few other ones too, and as different bucket. And when there are transactions that kind of like exceptions from those bucket, they may be totally correct and act like authentic, but it may raise the question, right? So then we will reach out to the school. We will still do it as a desk audit at that time, meaning we are not there yet. But we will, hey, school A, can you provide me more supporting documentation about this particular transactions? And then we will review offsite. And then when we found, oh, wow, it may not be the right way to do, then we will coordinate for site visit for those particular transactions. And after the site visit, if we see something like really not good happening, then we will say, oh, we need to do deeper dive into your other school transactions as well. And then we call for a BPA, business process audit.
And I do want to add that we do like random sampling. So some of those will be a random sample, but there are some that we are judgmentally sampling as well, just looking at the amount and the type of vendor.
So if you did, first and second quarters put together about 78 sites, you should have 120 to go for the third and fourth.
You need to use the microphone to capture your voice.
We already started on the third quarter review, and we have about 50 schools that we are working on right now.
Okay, third quarter review. But third quarter review is done in the fourth quarter. Is that okay? Got it. Thank you.
Great, thank you. Ms. St. John Cunning?
So, just because I do know that in some situations it's been difficult to keep finance techs, and there's been, so looking at the totals, and so 28 sites out of 78 don't have any exceptions. So that's a third. So 2/3 do have exceptions. And so I think what would be important, and you may or may not have this data, is where those exceptions are occurring, like in elementary, middle, or high school, because of how the structure is in terms of, a specific finance tech or an AA that's also a finance tech. And then the other information I think that would be helpful for us is of the finance techs, how many of them, like the ones that have 28 no exceptions, are those experienced finance techs versus new finance techs? So we could retain finance techs, are we going to see a reduction of exceptions? Or is it just random all across the board? I just think that data might be important.
Yeah, and definitely, and we can look at, by school, by level, I think it's pretty, because we have those data set with us, Marcia, so we can analyze those. But in terms of the, whether those are experienced finance tech or are they like having like a lot of turnover, I would need to defer to Sima to respond.
So we actually try to tackle it the other way, where we're trying to help the schools, right? So when we look at it, we look at what are the new and vacant positions across the board. And right now, for example, there's a 28% new and vacant rate across the board. And if you look at the deep dive, that's 56 new and vacant positions, new meaning they are on the job 9 months or less. But if you take a deeper dive on the new, there's 37 at the elementary school, 5 at the middle school, and 8 at the high school. So there's a large number at the elementary school, which are the AAs. So a lot of what happens in the continuous monitoring or the business process audits is these findings come about when there's vacancies, there's new positions, because the learning curve, it takes a good year. And you can see at the elementary level, there's a lot of turnover where there's a lot of new positions. And we try to tackle it on the other end where we want to keep them out of the audit. So we have multiple efforts where we're trying to counter it with mandatory AA and FT trainings so that we can get them trained. We have a 2-year mandatory training. We've upped our video library because when we've listened to them and they said, hey, look, we go to your trainings, but we go back and we need refreshers. So we have now 30 videos and scenario-based trainings that they can go to at any time that they feel that they need. I'm also trying to put in automation where, like a lot of what you've heard today, is FMR reconciliations is one of the big things, and P-card in particular. We're trying to make it where it's an online requirement, so they have to upload those things. And then we can see, did they do it? If they're not doing it, we can reach out, try to help them, see if they need training, see if they need support. And we're trying to automate the school finance handbook so that it's not just paper book, it's actually a living document. But we're trying to tackle it in multiple ways.
Okay. Seeing no further questions, comments, we're going to move on to item 1.05, FY26 Risk Assessment and Proposed Audit Plan. I will call on Ms. Ko.
Thank you, Mr. McLaughlin. So today is an exciting day, and I think this is one of the most important documents generated by our office. If I may plug in also, next month also is an important month for internal audit. Some of you may know about it already. It is the Internal Audit Awareness Month. So I think we timed it, the good time that we are sharing it here. And I also want to introduce our hourly auditor Mukta here. He has spent a lot of time working on it. He's one of the new face here in addition to my team. We are small but mighty team, so very proud for each one of you. So with that, like Ryan mentioned, today we're going to share with the audit committee kind of the result from the risk assessment. And I think I have conversation with many of you about the why we picked this audit topic. So, but if you have any questions, feel free to let me know and let us know, and then we can have a conversation. So the contents of the presentation is basically we would like to outline the objective, which is under slide 3. As you know, to get into this whole exercise is to achieve our mission, right? Our mission, many people think is like the numbers only. Actually, it's not just numbers only. We are looking at on the ongoing processes for the school system to ensure that it is efficient, effective, and be fully accountable. And then the second objective is to really link what we are doing with the FCPS strategic goals, specifically under like the accountability pillar. And then the last is why we are here today with the audit committee is per the policy 1105 that we shall submit annually to the audit committee a work plan. And thank you for the clerk to highlight that. For the upcoming fiscal year, so that you all can take a look at it, and once you concur with it, we can proceed with the school board discussion. So with that, going on to slide 4, and here are how the sausage is being made. I mean, all the different steps that we take, and I will try to get on it at a high level. First, we have to identify what is the audit topics. When you think about it, for such a big system like us, there are many, many things that we can consider to audit. So after we identify the potential audit topics, we really need to prioritize them. As a result of process number 1, we identify 47 topics. So we try to work with this 47, and you saw all my team members here, and there's no way that we can do all the 47 topics in a year. So we developed this approach that we looked at 21 internal audit departments that include many school districts, and we also looked at Fairfax County government as well, because we are in the neighborhood, we want to understand what do they audit. And it was interesting that when we do this research, sometimes we found out that the audit plan for the other organization look exactly like us. Then we found out that they actually relied on our structure, on how we are doing it, and copy for themselves. So I think it's a good story to tell over there. And then after we conduct the benchmarking, we also solicit feedback. So I'm also very proud to report that, and also thank to all of you. I was able to get 14 out of 14 feedback. And you may wonder why 14 is 12 from the school board members and also 2 from our community members who are here with us. So thank you so much for your feedback on it. And then at the same time, we would also like to solicit feedback from our employees because they are the eyes and ears. They know what need to be worked on. So we conducted this interview and survey. And I would like to explain a little bit because you may find it a little bit odd. Why 59? Why not 60? Why 78? It's so precise, right? So how we come up with, why don't I talk about the surveys first? So our strategy is that we want to adopt different ways to kind of collect feedback. So we develop a questionnaire. We send it to all employees who are senior managers and above, except for leadership team members. So we send out roughly 300 surveys, let's put it like that. And out of this 300 surveys, 78 participants responded. So we got a rate of roughly 30% of response rate. And then out of those who did not respond to us, we looked at kind of what they do in the organization. We reach out to them and we request for an interview. So if they have already responded, we don't need to interview them. But we looked at those who did not respond, and it happens that maybe some of the topics that we would like to explore further is their area of expertise. Then we will ask for an interview with them. And in addition, we also interview all the leadership team members. So thank you very much for Dr. Reed and her team willing to spend time with us to talk about what are the things that will be helpful for them. We also talk to the principal associations for all the 3 levels. We also reach out to some of the association, like let's say the Director of Student Services Association, to get their thoughts about what will be value added to audit. So that's how the 59 and the 78 coming from. And then after we got all the data, then we looked at what the dollar amount, the financial impact, reputational impact, meaning that if we are not doing well over a certain area, even though the price tag attached is not huge, that may have a significant impact to FCPS. We would like to identify those topics to be looked at. And then we also evaluate based upon what's happening in our county, what's kind of discussed at the school board meetings, what is kind of like important for the school districts to consider. Then we will reevaluate everything. And then as a result, our products will be number 3, and then we can determine what to be looked at next year. Secondary, meaning in the next 3 years, meaning from fiscal year 27 through 29, long-term are those priorities that which is good but can wait for a few more years down the road. So with that, I may need some drum roll for the next slide. Here is the result of what we get from the school board and audit committee responses. And we try to make this graph easy to read, so I hope that it makes sense to you. We try to rate kind of the highest audit topic of highest interest audit topics. The one that is shaded yellowish is the one that with a count of 8 or more, because the total is 14 counts for school board and audit committee members. So primary meaning those that we suggest to audit in fiscal year 26. So we have specific contracts, we have healthcare claims management, we have safety, we have hourly employee structure. And then we noticed that for stipends is actually number 5, and we would really want to include that as part of next year audit topic as well. So you will see in a little bit that we incorporate stipend into the hourly employee structure, meaning we call it hourly employee structure and stipends. Both are human resources focused. And I would like to touch upon the athletic program. I will talk about that in a little bit too. We noticed that this is a very important topic and has a lot of interest. Since we know that currently we have an external review going on athletic programs, so we prefer not to look at it this year, but instead stipend is a part of it, right, as you all know, so that we will be including the stipends component. And we will also continue to do those unannounced gate receipt check, and like Danielle mentioned earlier on, so that part of the athletic programs is covered, but we would like to wait until the external review is done in order to convene a maybe more comprehensive review. And for career and technical education program, we also know that this is a important topic and we should look at that further too. So instead of looking at it from a process standpoint, looking at it from instructional services department standpoint, we are including it, we're proposed to including it in the business process audit so that we can select school that have academy or school that have CTE programs, then we will be specifically looking at those financial transactions for them. So we try to include those topics that have high interest in one way or others, even though that we may not be able to include the full audit. So with that, slide 6 is the key outcome. And it's like what we talked about. When you looked at it, our goal is really to develop a holistic plan. So we would like to be able to look at something that maybe human resources are working on, something that safety team is working on. For specific contracts, number 4, we are proposed to pick 2 departments. One is instructional services department, and we also want to pick the special education, special services department as well as the focus. And then at the bottom, you see we also have this annual engagement that we will continue to do year after year. As we have a very robust discussion before about continuous monitoring, for me as the Auditor General, I just think that it is very essential that we have a tool that we can look at the universe of all transactions of schools, because that's what we do here at FCPS. So with that, slide 7, more data about the key metrics about the 4 process audits that we would like to select. So you can see who will be our major stakeholders, have they been confirmed by benchmarking, what are the financial indicators as well, how much are we talking about? FCPS employees column, meaning those employees who suggest those topics as primary topics. And for the last column, you can actually reference it back to slide 5. These are the statistics that we got from School Board and Audit Committee to say they should be listed as primary audit. And then moving on, and we talked about it already, that stipends, we propose to include it together with the hourly employee structure. And some of the topics, the 4 topics listed here, they also got very high interest, but we are not going to include, like I said, the comprehensive audit of that in fiscal year 26. And I put down my team put down some reasoning behind why not. And I think I touch upon athletic programs and I talk about CTE. IT governance is also something very important, especially now we are moving a lot of the things electronically. Since right now we have a few IT-related audits, we are still in the process of doing management response for recommendations, so we would like to wait a little bit more, as well as HR operations as well. If I can do to give a little bit more details about the hiring audit, we know that this is an important topic. We are auditing it right now, and the audit committee should hear the report from us in the month of June. So we are trying to cover everything in one way or the other. And slide 9 is the timetable. Is the timetable of when we are going to do different things. For example, local school activity fund, you must have heard about it many times during the audit committee. We have to carry it over. It's only because we have to audit the year-end balance as of June 30th. So we are, like we discussed before, we hope to present it back in October. And then it also have the timing for the other audits that we proposed. So moving on, I think we have even more exciting things coming up is a lot of the details behind which of the audit. As I know that we can all read from the slide, so I don't want to read the slide to you. Slide 10 is about local school activity fund audit. It's something that we have been doing because it's required by the Code of Virginia, and we are going to look at the cash balance, and cash here refer to cash and cash equivalents. So meaning including checks, including banks as well. So I just want to highlight that. And moving on we have extensive discussion about business process audit, so I'm going to skip that since we already talk a lot about BPA, and of course we would like to continue to do that. Healthcare claims management. We can focus on the scope of work. This is a relatively shorter time audit. So as you can see under schedule, we expect that it will only take 4 to 5 months to complete. The intention of this audit is not for my team to do claims audit, because we don't have that expertise to go to Cigna to pull up the claims to review. Actuary or those who really are in the insurance area can do that. Our focus is we would like to understand how the Office of Benefit Services manage the claims amount, right? Have we done enough prevention to, if we see a pattern of increasing in certain, spending in certain buckets, what do we do about it? How do we monitor Cigna, specifically Cigna and also Aetna Dental? And then we will also see if they have performed any external audit of them. If they do, is the timing aligned with the contract timing when we have those contract active, so that we can make more powerful changes in case if the auditors find anything that is not right. So that's that. And then moving on is the hourly employee and stipends, and I think I talked quite a bit about that already. But if you looked at the objective, you can see what we are going to audit is to evaluate whether there are appropriate checks and balances to ensure the hourly structure and stipends are properly authorized, and they have the fidelity of implementation across FCPS. And then moving on, 5, we have already talked about local school activity fund, but this will be for the next fiscal year, June 30th of 2026. And then moving on is the school and office safety. And as you can see that this remain as kind of like the focus, I know, for management and for our community members as well. And then we also benchmark with a lot of our neighboring districts. This is a topic that often come up in the benchmarking. And we also want to acknowledge that we understand FCPS has conducted an external review on it in fiscal year 23. So we see this as a continuation of that. And we also have multiple conversations with the Chief of Safety and Security Office, so to ensure that we are not duplicating work that have already been done. So moving along, specific contracts, and this is the champion, if I may say, of the entire risk assessment process, which get the highest number of support from the school board and also audit committee members. So we will continue to look at it. The focus of it will be on, like I said, instructional services department and also the special services department contracts. And we will focusing on those contracts and how, as the user departments are monitoring them. Our focus will not be on procurement services because we literally just audited them. But we included them as the internal stakeholders because we may need to get some data points, some contracts from them. So moving on, we are almost done, so maybe 2 more minutes. Continuous monitoring, we already shared the result and we would like to continue in next fiscal year. And maybe moving on slide 18. And this is some of the things that we usually put it under all other duties. But we do want to extract them, to highlight them, is because this year we have some updates from the government auditing standard. So this is the standard that OAG comply with. So we have to really update our menu, update our work program to ensure that we are in line. We also want to call for the external peer review here. Someone may ask, so who is auditing OAG? So by government auditing standard, every 3 years, we have to have an external reviewer coming to audit us. So it happens to be the next fiscal year. So I would like to highlight that here. So moving on, under 10 are some of the other OAG duties. Just want to highlight one thing, if I may, the outreach and education. As of today, for this school year, over 1,000 employees have been trained by our office. So again, I really appreciate Dr. Reed to give us a lot of opportunity, to present to our employees so that they can see something, say something. They come to us so that we also can talk to the school-based administrator to present to them, as well as the finance technician and AA administrative assistant at school. And then here is my last page, next step. So today will be the first time we discuss it with the audit committee. We also put May 12th here, just in case if there are any questions from this committee from today that I need to take it back and amend the plan. And then the work session with the school board will be on June 17th. And on that day, we also will present to the board for our last fiscal year annual report as well, fiscal year 24 OAG annual report, which we had already presented with you all back in December. So it will be a time for the board to hear about that. And then final approval will be on July 10th. And then the last slide is the bonus slide where we have a lot of hyperlinks. So if you would like, hey, after Esther, your presentation today, I really want to find out more about the different things. And here are the hyperlinks. So with that.
Wonderful, thank you so much. And so as General Ko mentioned, we will be discussing this today. If we dispense with everything and all discussion today, we will be able to cancel our May Audit Committee meeting. So please raise any issues now, and we'll take consensus at the end if we can move ahead without our May meeting. So please, I'll start with Ms. Levy.
I'm so disappointed that we'll be canceling it.
Just a question about the stipends. I assume those are sort of athletic and performing arts. What's the approach of the audit?
So I think, first of all, we have to come from the policy and regulation first, right? To see what they say, and then in reality, are we doing that consistently across the district? So that's number one. Number two, and again, I'm just brainstorming now with you, Robin. Number two is to look at the completeness of those lists too, because based upon my understanding, we may have some, it may not have some other potential job duties that may qualify for extra pay. I don't know. So we have also need to take a fresh look at what makes sense to make to the list, and then to see if they are consistently applied across the district.
Okay. And the reason I asked the question is, having been someone who received stipends throughout my career and having employees who I supervise receive stipends, one thought is, could it be possible that the audit include the possibility of, instead of making these individual payments, that they become part of the employee's salary, because then it impacts their retirement? And I bring that up because I do believe there are other jurisdictions in the state of Virginia who do make it part of their salary. And so I don't think it's a state law. And absolutely in places like Pennsylvania, New York, it's part of their salary. Because if I coach 3 sports, while each individual check might not be large, ultimately that could be an extra $8,000 on my salary for that given year. I also would argue that, and again, I don't know if part of the audit is whether or not the stipend is appropriate based on the hours, because the other thing I was going to say when it comes to something like performing arts, I know at Chantilly we did a lot of shows, and I know at some schools they do a spring and a fall, right? So I'm not sure what that looks like in terms of, are you doing children's shows? How many people, what's the breakdown hourly? And I do believe that, what's happening, I think, similar, it could be a number of concerts that you have, maybe in choir. I don't know. I just am not sure what it looks like. But one of my questions is about the stipend. And the other one would be that in that same vein, that when people work in online campus, they're technically, from my perspective, given a stipend for that, because it's not part of their salary. Now, I'm not sure if it's paid all, like in so many payments over the course of a year, but people who teach summer school, it's the same thing. It's not part of their salary. And for the same reasons, I would argue it being part of their salary for other folks, they're going above and beyond, they're doing more work, it should be part of their salary. Because as we know, your top 3 years is what your retirement's based on. So I wouldn't limit it. I understand you're probably not looking at online campus or summer school right now, but technically those are stipends. Thanks.
Thank you, Robin. So I think it's great considerations. We definitely will consider the kind of what you mentioned. We also very intentionally to keep the objective very broad right now. So we can certainly include certain aspects that can help us is after we do the planning, then we can see, oh, if what, Robin, you just mentioned, is that systematically happening. And we would also be very cognizant because we know that we now have the collective bargaining agreements. So just in case for any recommendations that we made, we will be in close contact with the employee relations. Because when you talk about salary and then combination into that, I don't know what is the ramifications about that. So we can definitely talk more.
Thank you, because I think historically the rebuttal I got was that our HR technology couldn't manage to do a shift like that, but we just invested a lot of money in a brand-new system that should be able to capture all these things, and then it should be able to be done from a technical perspective. Thank you.
Great. Mr. Moon?
Just out of curiosity, from the senior managers who responded to a survey request and also talked to you, did many of them volunteer their offices to be audited?
I would like to say I would remain the name, not disclose here in a public meeting. Yes, yes.
Wow.
And some of them, I feel like that to us is a long-term that we work very closely with the school board and the audit committee that we can build a trust, that they know that we will take it very seriously, just like our fraud, waste, and abuse hotline, that some of them, they really come forward. And then we receive some, authentic, situation that really worth to look at.
So without disclosing any identity, what would be some of the reasons for someone to have auditor come in to audit his or her own work?
So I think the intention, right? Because I do not read the mind of the people, so I don't know exactly why they let me know. But I think a couple of them, right, is definitely generally they really see if the processes can be improved, our students, right, will be able to benefit more. I saw a lot of that, right? And then sometimes they may see, they may be redundant, like meaning extra checks and balances, and it's really delayed the process. So they will let me know too. Sometimes I need to be candid is maybe some of the offices may be looking for more financial support, like budget-wise. They will say, hey, Esther, we really understaff, but then we really see the risk not mediated. Maybe through an audit, maybe I'm saying, because I'm very cognizant about the tight in the budget, that maybe there are other ways that we can innovate, right? Be able to solve the issue without putting a lot of money investment into it. So we got these different types of people or staff members who generally is trusting us with those information and see what we can do with that.
And those are really good pieces of information.
Yeah.
Thank you.
Nanette?
So athletic programs is a really big bucket of stuff, and some of it you've already picked out, like the gate monitoring, but I don't know what the scope is of the external audit. So how did you look at the whole bucket of everything that's involved with athletic and say, okay, we're not going to do anything except these two things we've picked out already? Is it because everything else is covered under the external audit, or are there some things you just don't think there's any risk there?
Great question, Ninette. I believe that the external review is a privileged document, so I am not sure if the objective of that review is, being discussed in the public domain. But what I suggest, Ninette, is this. I would like to take a look at the result of that external review after it's being done, and then to see what are the remaining areas that we have to focus on. My understanding, and I don't know if Dr. Wu would like to comment on that, about the scope of work for the external review, is that it covered pretty comprehensively. In the meantime, my office could pick up those financial focus areas like the athletic stipends that we were just talking about it, and as well as the gate receipts, because we know that I don't know if you have go to some of our games, right? The controls there can be further improved. So we are just picking those items, and then we can continue to do that. But I don't know if Dr. Reed has additional points.
Sure, thanks, Esther. Actually, Esther and I talked about this one because it's one that I thought we ought to take care of sooner than later, honestly. But a couple things came up. One, VHSL just instituted 19 new rules directing topics of this nature that weren't in place before. So Esther's talked about you need to audit against the rules. So it sort of became an interesting conversation. And secondly, some of the external investigations likely to look at the auditor's work, because Esther investigated several of the topics last summer. So it's one of these. So I think in thinking about it, the idea to wait till that's done makes sense, and I agreed, with Esther about that.
Great, thanks, Nanette. Yes, over to you, General Co.
Just very briefly to Ninette, if in any case that something, earth-shattering is being uncovered from this external review, I can always come back to the audit committee to request an adjustment to the audit plan. So it doesn't need to wait until fiscal year 27. So sorry.
Miss Lady, did you have something else? Okay. So seeing, Miss St. John Cunning, yeah.
So just based on what Ms. Lady talked about in terms of stipends, when you start looking at that, I think it would be important to collect the data of how much a person generally gets in stipends in terms of how it would impact. And I don't know that and I don't know, correct me if this is wrong, if this would be a collective bargaining or an HR issue, whether it's put as salary. So if you're working and it becomes salary, then I don't understand how that would go into collective bargaining.
So, and good afternoon, everyone. As it relates to collective bargaining, anything that would cover wages or salary or compensation is the purview of the unions for that discussion with the superintendent and her team, who then would share that with the school board. So we wouldn't want to create a situation where the school board through the OAG was making recommendations on salary and compensation without engaging with the unions.
Okay, thank you. But just to know, because I think that's an important point, if other jurisdictions, do you add the stipends to the salary?
No, we do not.
They don't?
No. Are you, coaching stipends
Well, any
get
kind of,
paid on top of a salary?
but then like summer school stipends, after-school club activities, like the impact that can have on someone's retirement in terms of salary would be
Oh, I
significant.
don't think it doesn't, stipends don't impact retirement generally. Sorry, I don't.
I'll have Ms. Lady explain.
I know it doesn't at present here, but in your former systems, it never did?
It did not.
Okay, because there are systems where it is. So that's why I bring the question.
Well, it didn't in the state I came from.
Okay.
Just as certain, like if you got mileage monthly or whatever, it doesn't affect your retirement. It's not considered salary or benefits.
Yeah, because one of my thoughts on online campus is I don't like the way the pay is structured. I think we're overpaying too many people. But I think that, and I think they would admit that because they have to me off the record. But I think that if it was rolled into salary, they would accept a different pay because the outcome goal benefits them in the long run.
It's possible, but again, that would be a collective bargaining item because
Okay.
it's connected to wages and benefits.
Okay.
So, but I'm now more curious than ever to explore the salary structure, and I think we'll make a note to make sure we do that.
Great. Anything further? Okay, so seeing nothing further, I'm going to ask for my colleagues' consensus that seeing as we've covered this plan today, that we dispense with our May 17th meeting, or sorry, May 12th meeting. All those in favor? Okay, that's unanimous. Consensus has been reached. So we agree to move the FY26 risk assessment and proposed audit plan forward to the full board. Okay, so with that, the April 28, 2025 meeting of the Fairfax County School Board Audit Committee is adjourned at 5:42. The next meeting of our audit committee will be held on June 16th, 2025 at 4:30 p.m. See you all then. Yeah. Yes, yeah, thank you.